I'm going to share with you the secret to getting consistent trading results. And the biggest thing is your win rate. Now, the problem with most strategies out there right now that have a high win rate is that when you lose far too big. Okay, so we need to make sure the winners outweigh the losers, and that's exactly what I'm going to show you how to do. So, the first thing is open up a futures watch list that have options available to trade on them. And then once you've got your watch list open, if your broker doesn't display this list natively, copy these ticker symbols, make your own watch list. The important thing is to have IV rank on your watch list, order everything from high to low, and you only want to look at underlyings to trade that have an IV rank of at least 30. Okay, that's very important. Now, what we're going to do is we're going to use natural gas because I just love natural gas. Great underlying to trade, and it's good. You could make positions out of it even if you have a small to medium account ish. If you have a large account, you'll be absolutely fine. But if you do have a smaller account and you want to still make use of this strategy, pick a different underlying. Pick something like currencies, bonds, soybeans, etc. Things like that. They don't require much. So once you've selected your underlying, go over to where you can see a list of option expiration dates for your underlying, and you want to pick one that's between 30 and 60 days out in time. So there's one here 40 days away, May 27th, which we're going to open up. And now we are presented with the options chain, and you want to make sure you have the delta columns on both the call and put side. And what you want to do is you want to sell one call and one put. Okay, very simple. And you want to sell them between 15 and 20 deltas. So if we come over to the let's just go over to the 15 delta. Let's be a little bit conservative today. Normally we're more aggressive, but let's just go with the 16 delta on the put side because there is no 15, and we have a 15 delta. Let's just move the call side to a 16 delta as well. So we're now 16 deltas on either side. On the call and put side, we are virtually delta neutral, as you can see here. And what we've basically done is created a range for ourselves, because anytime you are short a contract, you are basically wanting price to stay away from that contract. So we're short the 2.8 strike put here. That means we want price to stay above 2.8. We are short the 4.3 call. That means we want price to stay below 4.3. So we've created a range that we want price to stay within, and price is currently here at this horizontal orange line. Now, if you look in the bottom left corner, we have a pop, which is probability of profit of 71%. That means there's a 71% chance of being able to make money on this trade at the point of expiration. Anything over 50% is considered a high probability trade. So we're already off to a good start with 71%, but we are going to increase this even more. And the way we're going to do that is by exiting and managing early. Okay, so this is your win rate, or your probability of winning your trade or making money on this trade if you hold to the expiration, which is in 40 days time. We're going to get out at 50% of max profit. We can even get out sooner than that, I'd say anywhere between 25 and 50%, but let's just say 50% for right now. What that means is, if we have a look at our max profit number here, $1,260, this is what we would collect up front. Okay, and when we say we're going to get out 50% of max profit, we're going to get out at 50% of this max profit number here. So we're going to look to exit at around $630 of profit. Okay, and what that's going to do is that's going to increase your probability of making money by about 10 to 15%. So your P50, which is displayed for equities, but for futures it's not, your P50 is typically going to be 10 to 15% higher than your pop. So your P50 is going to be around 80 to 85%, and that's the likelihood of reaching 50% of max profit at some point during the duration of this trade. So you're looking at now an 80 to 85% chance of success on this trade. You're going to collect $1,260 up front, and your broker is going to require $1,628 in buying power to open this position. Okay, so as you can see, we are getting close to a 100% return here. Very, very nice and high return. Very high probabilities of success here as well. Okay, and remember, this is in 40 days. This is not over the year, this is in 40 days. Okay, this is the power of futures because it uses something called span margin. This is why we get such a high return on our capital. We're also going to get $44 of daily theta decay. Okay, so with that being said, you need to keep your buying power in check. You need to size your positions appropriately, and the way to do that is using our free position sizing template, which we have available for everyone to use. It's completely free. You can get your own copy of it. The link is in the description, and the way it works is you enter in the size of your portfolio at the top, and then you enter in whatever the current VIX level is below it. So let's just say if it's 42.1. And as you can see, everything is going to be automatically calculated for you. It's going to tell you exactly how to structure your portfolio, exactly what your maximums and minimums should be per position, whether it's defined risk or undefined risk. And it's going to work dynamically in accordance with how much volatility is in the market. And that's really what you want, because when volatility is high, our edge is high, and that's when we want to be more aggressive. So as long as you're sticking to this, you'll be absolutely fine. If you would like to learn in more detail about what we do and how we do it, click on EDS Premium and get yourself signed up. Once you are inside, you will have access to this exact portfolio that I'm showing you an example of right now. We have a position on currently, we're up 12.5%. This is our fourth position for the week. So far, out of the 3 positions that we've put on and closed, all 3 have closed winners. This is our 4th one, which is currently in a profit right now. So you'll get access to everything. You'll see all the trades, all the management, all the adjustments, everything in real time. It's all there for you. There's also a full course, so no prior knowledge is required. We'll teach you everything you need to know from start to finish, and it's also a private community. So if you do get stuck, you can speak with myself, you can speak with other like-minded individuals that are already inside, and there's a 100% money-back guarantee. So after 6 months, once you've been through the course and followed some of our trades, if you're not profitable, then we will work with you for free until you are, or you can simply request a full refund. So it's completely risk-free. It's $9.99 a month to join. The price will be increasing once this current wave of members is full, but once you're in, the price is locked in for you for life, so you are rewarded for getting in early. And the aim of EDS Premium is to teach you the skill. We do not want to keep you dependent on us. We do not want to keep you reliant on us. We want to teach you the skill, and once you've learned it, you can take it with you for the rest of your life. No one can ever take it away from you. It's a very powerful thing to know, and we aim to get you to a point of where you are self-sufficient within 6 to 12 months. So with that being said, I will see you guys on the inside.